Hello and welcome to Markets View at Deven Choksey, your daily market bulletin where we decode the Indian financial markets. We first deep dive into what's happening with the global markets and then take a consideration of how the global markets are impacting the domestic markets. So let's get started. In the fresh week, if we see, the global markets are showing the signs of mixed sentiments. The GIFT Nifty has started lower, indicating a gap down start for the Indian markets. Around a 40 to 45 points downtrend in the GIFT Nifty is a concern for the domestic markets. Apart from GIFT Nifty, the Asian markets are mixed ahead of Japan's Bank of Japan decision and South Korea inflation this week. The Nikkei has fallen around 335 points and the Hong Kong markets are fallen around 90 points to be precise. So clearly, signs of concern and mixed sentiments coming in from the Asian markets. If we have a look at the US markets, the stock futures rebounded slightly with the S&P 500 seeing a correction ahead of a big week. Of course, just like domestic markets, the US markets are also witnessing result-specific impact. But if we have a look at the Friday session, the Dow Jones closed by around 366 points downtrend. The S&P 500 closed by around 20 points downtrend and Nasdaq did see a positive up move of around 50 points while closing. So as we see, mixed sentiments coming in from the US markets as well. Talking about the energy pack, the oil has dipped as caution about data-heavy week offsets Mid-East war boost. The Brent crude is trading at around $89 to $90 a barrel. The natural gas is also trading with a downtrend of around 2% as we see, and if we have a look at the bullion market, of course when the markets are volatile, one reaches out to the safe haven commodities, and that's what's happening in bullion market with gold and silver both in global and domestic market. The gold gains on Middle East risk and spotlight on Fed meeting. If we have a look at the global market, both gold and silver are witnessing up move. The gold is trading with an up move of around 1% and silver in fact is trading with an up move of around 2%. And of course, the US 10-year bond yield is trading at around 4.83% and dollar index is unchanged at around 106.57 levels. So that is how the global sentiments look like. It is a mixed bag from the global markets and one needs to consider the concerns coming in from the global markets as it will have an eventual impact on the domestic markets. So let's now take a look at what one needs to consider for the market session when it will open today. We are starting a fresh new week, and if we have a look at the Friday session, the market rebounded sharply after days of relentless selling, with the benchmark Sensex and Nifty closing a percent higher on Friday session. Will the indices, which closed the week 2.5% lower, hold on the gains which we did see on the Friday session is a question worth an ask. Well, bearish sentiments is expected to prevail and uptrend, if any, is likely to be sold into, is what one can consider, as we have seen a lot of volatility in the last 2 weeks and the volatility may sustain even in the coming week. One needs to be really very cautious. At best, the Nifty, which closed at 19,047 level, may consolidate below 19,500 with major support at 18,800, the low of the previous week. Selling pressure will intensify if the index slips below 18,800 and can slide to 18,600 to 18,500. On the higher side, 19,200 to 19,300 will be the immediate resistance, followed by 19,500. So get ready for an action-packed week. However, there were hopes seen in the Friday session, but one needs to consider that there is a lot of volatility in the market and one needs to be very cautious while taking any positions in the market. The index closed significantly below the critical breakdown level of 19,250. As long as it stays below 19,250 level, the market may continue to be inclined towards selling on any upward movement. On the downside, weakness will resume if the index falls below 18,800. This is because there's a lot of put writing and likely to defend the Nifty with substantial positions of 18,800 with an immediate support placed at 19,000 level. But also on the upside, the index closed significantly below the critical breakdown level of 19,250, and as long as it stays below 19,250 level, the market may continue to be inclined towards selling on any upward movement. So this is how one should read the indices. Now let's take a quick look and understand what will be the support and resistance for Nifty and Bank Nifty for the session. For Nifty, the index might take support at somewhere near 18,960 mark, followed by 18,924 and 18,867. On the higher side, 19,074 can be an immediate resistance, followed by 19,100 to 19,166. For Bank Nifty, the Bank Nifty pulled back from the steep decline during the week to close 1.2% higher at 40,782 mark on the Friday session. So the pullback can continue till 43,400. On the downside, 42,730 to 42,600 is a crucial support zone. Let us now take a look at what are the results which will be posted during the session today. The list has UPL, DLF, TVS Motor, Adani Green Energy, Marico, APL Apollo Tubes, Blue Star, Castrol India, KPIT Technologies, Nippon Life, Petronet LNG, Ramco Systems, Spandana Spurti, Supreme Industries and Tube Investments. Apart from this, there is another list of cash numbers, also a few others, but these are the important ones which one needs to consider for the session. Let's quickly take a look at the stocks in news. The first stock in news is Reliance Industries, as billionaire Mukesh Ambani owned Reliance Industries recorded a 30% year-on-year growth in consolidated profit at 19,878 crore. The EBITDA rose around 30% on a year-on-year basis to 44,867 crore, and the margin expanded by around 390 basis points to 17.5%. The gross revenue was up 1.2% on a year-on-year basis at 2,55,996 crore, supported by continuing growth momentum in consumer business. The second stock in news is Union Bank of India, as the public sector lender, reported a 90% year-on-year growth in the net profit at 3,511 crore for the September quarter, led by a significant fall in provisions. The net interest income grew by 10% to 9,126 crore, with a net interest margin expansion of 3 basis points at 3.18%. The next in the list is SBI Card, as the credit card company registered a 15% year-on-year growth in profit at 603 crore. Revenue increased by 24% on a year-on-year basis at 4,087 crore, driven by higher interest income and fees and commission income. BPCL is another stock which one needs to consider, as the state-owned oil marketing company recorded a standalone profit of 8,501 crore for the September quarter against a loss of 304 crore in the year-ago period. So we can say that the results were partly supported by lower input cost and the company came into profit from losses. Revenue, however, fell by 10.3% to 1 lakh crore. And last but not the least is M&M Financial Services, as the financial service company reported a profit of 235 crore for the September quarter, falling 48% on a year-on-year basis due to an increase in impairment on financial instruments. The revenue grew by 24% at 3,212 crore, aided by growth in the asset book. Let's now take a look at what happened with the FIs and DIs data. The foreign institutional investors sold shares worth Rs 1,500 crore, while the domestic institutional investors bought shares worth 314 crore on the 27th of October. So that is how the market framework for today's session looks like. We are starting with a fresh week, and of course the festival season has also started. There is a lot of events and happening in the market along with the results season. So with this, we come to the wrap of this podcast session. But one needs to consider, like we always say, that irrespective of market conditions, research is the backbone of successful portfolio creation. Wealth creation is an art that we understand. We at Deven Choksey have our exclusive research services, which are powerful and successful. To avail our exclusive research services, we invite you to join us. Just click on the link below and you're done. Fill in your basic details and our team will reach out to you. So don't wait any further and embark on a wealth building adventure together. Thank you and have a nice day.